everyone. Welcome to yet another episode on our channel Talk of Town. We are here in our weekly series called Market Wrap. And yes, I am back after a week of break. What a week it was. Indian markets have been uh, quite volatile, down by more than 2.5% during the week. The Prime Minister's statement lasted only for a week, right? And after that, markets have started to show its true colors. And on the other side, US markets have done nothing over the last 1 week or so. I have with me the big bull reporting straight from Dubai, Mr. Prabhanjan Rao. Welcome to you, sir. And I also have the market maker, Mr. Ashwin Kumar, director of DA Capital. Welcome, both of you, gentlemen.
Thank you, thank you. 1 week of break has boosted the way you kickstart your week. So thank you so much, Lakshmi. I mean, it was quite a week.
Absolutely, absolutely. So, good morning. Let me also reciprocate the same. A sizzling salam and a caffeine charged good morning to all stock market enthusiasts. Where the markets never sleep, the sun never sets on volatility. And Ashwin, I promise today's commentary will be spicier than your weekend biryani.
And I think with the way markets are doing, I think even though you want to sleep well, it wouldn't allow you to sleep well over the weekend, considering the way it kind of gave up yesterday and during the course of the week. Of course, we will talk about the technicals as well as how the options data is panned out. And sometimes while you feel that the market sell off is a bad thing, but when it validates what you forecasted the week back with the kind of, I mean, not just by any speculation but by the data that you have it at hand, it kind of gives you that sense of satisfaction that you are on the right side of the market.
Absolutely, absolutely, absolutely.
I
So,
think
well,
Yes.
huh.
I think we'll as usual start off with the global markets first, and then went over to the Indian markets later on. So over to you, Prabhanjan ji, for the
All right.
week that we recently concluded.
Right. Thanks, Ellen. So crude is around 67, so it's on the same level since last 2 weeks, maybe 1% here and 1 or 2% here and there during the week. But the week closed is like 67, 68 levels. Dollar index is also more or less on the same levels. Rupee that we need to talk about. So it has hit the fresh low, 88.2. It's a clear signal of stress. It's not the dollar strength here. It's also a tariff overhang and capital outflows weighing on sentiments. For the RBI, it's a balancing act. Uh, we need to balancing act to defend aggressively and risk draining reserves, or it might allow a gradual depreciation to protect competitiveness. So it has to play a balanced act. And for markets, this means import heavy sectors, oil and gas, aviations will feel the pinch, while exporters like IT and pharma get a short-term cushion. But the real concern here is the imported inflation creeping back into the food and fuel, just as GST reforms aim to ease consumer prices. It's a double-edged sword.
Yeah.
So this week we saw a bit of a summer hangover on the major US indices. Friday delivered a sharp close of reality. The S&P 500 slipped 0.6%, snapping a 30-day run to record highs. And those slipped modestly about 0.2%, and the Nasdaq retraced around 1.2%. Rolling up the tapes for the full week, it was a flat to slightly negative. S&P and Dow each is around zero point 0.1 to 0.2%. The Nasdaq backtracked roughly about 0.2%, while the small caps, as tracked by the result 2000, held firm with a slight gain of around 0.2%. Here's what pushing the narrative. Jackson's Hole. It
Yeah.
created ripple effect. Still reverberates. Powell's speech opened the door for a September rate cut, but crucially, he didn't lock anything in. Just kept the options alive as he always does. Markets loved the nuance, but some caution crept in afterwards as investors reevaluated just how soon and how deep the rate cut could come. To just give a perspective about what the week passed by in the global markets, especially the US, inflation remains sticky in the US. June's core PCE inflation held at 2.9%, a signal that price pressures from things like tariffs, utilities, and housing sentiments are persistent. Stagflationary undercurrents are back. Experts are flagging a stagflation-like scenario, slow growth paired with stubborn inflation. Not quite in the 1970s though, but enough to give the Fed headaches. Uh, Another interesting thing is the political heat is rising there. Trump's move to oust Fed Governor Lisa Cook is ratcheting up concerns about the central bank independence, and investors are watching very closely how that political interference might reshape the policy making.
Yeah.
Similarly, the retirees, they got the short end. Powell's dovish pivot is spooking the income-focused folks. They are getting squeezed by the falling yields and the inflation that's eroding real returns. So, while the narrative of an eminent Fed pivot helped fuel rallies last week, this week reminded markets that clarity and consistency might not come so fast. To give a small, update update on the tariffs and trade tensions, it was more or less the same. Trump already doubled down with tariffs, initial 25% reciprocal duties, and now stacking another 25% over the Russian oil imports. That nearly 50% barrier on Indian goods. These moves threaten 70% of the India's exports to the US and are testing the strategic, ties.
Right.
What it means for the Indian markets, the global moves or sentiments, what it means for the Indian markets is on the equities and sectors, the US Fed's dovish tilt has given emerging markets, including India, a tailwind. Liquidity flows could remain supportive in the near term, but sticky inflation in the US and Fed uncertainty means volatility stays elevated, particularly in the global facing sectors like IT, metals, and of course on the export oriented sectors. Domestic plays remain stronger. Uh, we need to watch, semiconductors and renewables very closely. One important thing which we need to, highlight here, having regard to the global events, is the currency and yields. The rupee is likely to stay under mild pressure, and my view is it will hover around 88 levels, and strong dollar sentiment plus US India tariff noise keeps India US USD INR biased very higher. RBI intervention and healthy forex reserves will cushion extremes, but short-term weakness cannot be ruled out. Another important point, the last point I would say, is the crude oil factor. U.S. President's temporary easing on India buying Russian crude gave a relief last week, but that kept Brent in check, supporting India's inflation outlook. But you shouldn't make no mistake. If tariffs escalate further or Russian supplies get choked, crude could spike back, pressurizing India's CAD and inflation. That will be very detrimental to our, market direction in the coming weeks. So that is
And
what.
you had this crude spiking during the course of the week. I mean, if you see, it kind of made it about 68 and settled around 65, which was still about 2% positive. But during the course of the week, I think we had a spike as much as 4.5%, 5%.
Yes, yes, absolutely, absolutely. And then
In
it
fact,
rolled
a
back.
couple of points which I wanted to add to what you just made, Prabhajanji, is what is interesting to see, or what will be interesting to see, is if RBI is intentionally allowing the rupee to depreciate to
Right,
discourage imports from
right,
other countries, and possibly kind of encourage our Indian exporters
right,
to make up for what they've already done. Because usually
Yeah.
there is a timing difference between the actual transaction and the receipt of payment. Maybe it could be intentional as well. We are
right.
kind of guessing. We'll have to wait and watch.
Right.
And
But what
secondly,
happens, Ellen, is like, it is a double-edged sword.
yeah,
Whilst we protect our domestic exporters, but the foreign FIIs, if you see the PNL for them, they always look in USD.
yeah,
For them,
Mm.
taking out money to 1 or 2% down during the weekends or during these tough times, they will never want to come back if the rupee depreciates, and it stays. The problem is the rupee depreciates is not going to come back; it's going to stay there. So that is where is the sticky thing.
Right. Also, one important factor is which probably we'll also be discussing during the course of this episode is we are at all-time highs as far as gold and silver is concerned.
Yeah.
So that's another thing which probably we could discuss during the course of this episode.
Right.
Quite interesting times ahead. And when you look at the U.S. markets, there are pockets of stocks which are doing extremely well. If you just look at the CAGR of what Nvidia has done, the CAGR is 50%, right? So we don't have such similar pockets in the Indian markets right now.
Correct.
Maybe
Absolutely.
that's a cause of concern, maybe.
I can go first. So, Lakshmi, what happens usually is there is always this volatility squeeze and volatility expansion. While we always like to track the prices as well, I am a very keen believer we have to track the volatility, be it in index, be it in just the broad market as well as the stock itself,
Right.
and naturally backed by the options data. See, the way the S&P, I'll be a little technical here. The way S&P candles are being formed week after week, there's a volatility squeeze. The
Okay.
candle size is becoming smaller and smaller, and there's a volatility squeeze. Naturally, what will follow is a volatility expansion. I think the same way, Nvidia, uh, it's a classical story. We have seen it for decades. I mean, things shoot up, people on board, things slow down, minor correction, people average, things move back up. Then there is a euphoric top. And let's not forget one thing. I mean, because I would also mention the same thing for the Indian markets as well. Markets tend to peak out during extreme good news, and markets tend to bottom out during extreme bad news.
Right.
So when too much euphoria is there, I think that's where we'll have to be very cautious. Now, what will happen to Nvidia? Because you took that example, I'm not saying the stock will not go up. It may have a high potential, but can I expect the same sort of 50% CAGR? I think most of the people who will be buying Nvidia right now at this stage is because of FOMO, uh, not necessarily because of fundamentals, not necessarily because the stock has a great potential. They won't do an independent analysis. They'll just come and say, look, give me a 50% CAGR. Even if it gives me a half of it in the next 5 years, 25%, I'm happy. That's what their primary motivation to invest in a stock like Nvidia is.
In
Not
fact,
knowing what is, yeah.
Mr. Prabhajan did a short on this herd mentality. So
Herd mentality, yes. So what kind of underlying current might be awaiting or trap might be waiting on the market? Because uh, like I said, now there's a volatility expansion in the stock. Eventually, it will start subsiding, and that's where we'll have to be more cautious on a stock like Nvidia. I mean, not I'm not giving an opinion here. I'm not saying the stock may not rally another 8-10%. We don't know that, but it should. We have to do an independent analysis at this stage rather than just coming and onboarding onto the stock because of the 50% CAGR that Ellen mentioned on the market wrap.
before I allow you to give us the inputs on the technical side for the global markets, without any rational, I'm just comparing the movement of Tata Motors from the COVID low and the movement of Nvidia the recent past looks very very similar to me. So
Absolutely. And
from
and
from
if you
70.
see Nvidia and Tata Motors, the issue with the Nvidia is it is in the it is not in the destination markets. It has gone and it has not fallen like how Tata Motors have fallen. Tata Motors have fallen almost like
40,
50%,
50,
40,
yeah.
45%, and it is staying there, going sideways for long. And the performance of the stock is heavily dependent on the global factors, right? But Nvidia is, on the other hand, it's not like that. So I mean, there is a lot of differences between these two stocks.
Yeah, sir, I would put it this way. So if you look at the movement of Nvidia, I think about 6 months, 7 months ago, uh, Nvidia hit about $140
Yeah.
and kind of fallen back to $90. Even that fell by
Right.
that 40-45%. But
Right.
the fall and the recovery was very very quick, unlike Tata
Mm.
Motors. Of course, the
Right.
timing
Right.
difference is there, but when you look at the movements, are very 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 similar. But of course, the time zones are different between the two stocks.
Absolutely.
In October, April of 2025, the stock made a low of about 86.62. I'm talking about the very recent past. I'm talking about a 4 to 5 month data,
Yeah.
and it has more than doubled, almost doubled since then. Can you imagine a stock doubling in the last 4 to 5 months? I mean, we don't even have to go back to history as much as 2022 October, where it made a low of around $10 to about 170. And mind you, this is after all the splits and the, I'm not sure if there was any bonuses or anything, but after all the splits and everything. At some point in time, the stock was trading at $400 to $500, if I'm not wrong.
Right. Ashwin, I think you can continue on the technical inputs on the global markets.
Nothing much on the. I mean, we've had a subdued week on the S&P. Gold and silver trading, nearly at all-time highs. Crude was a very had a quite a volatile week, intra-week movement. Uh, Not much changes on the view. I think now we have to go going forward. U.S. markets will be very very stock specific. Uh, Something that we have been maintaining for the last probably ever since we started this series, that I want to be very cautious. So anybody who has participated in the last 5 to 6 months rally of S&P 500 may want to either start cashing out some of their holdings, or even start hedging their portfolio with a covered call or something like that, because the same set of volatility may not, rather the uptick may not necessarily continue. Having said that, I want to reiterate to all our viewers and also to ourselves that we cannot ever call a market peak until it's done. I mean, even if we time it by accident, we are not going to get a medal or a big booster. So just let's not time it, but mathematically and being prudent at this stage of the markets is very, very important. Cashing out or even hedging your portfolio longs with a option, covered call option would be the most ideal thing to do if you really do not want to get out of the portfolio per se.
Got it. Prabhajanji, how does the factors on the Indian markets look like, especially after the tariff implementation in the during the course of the last week?
Right. And we have seen, I mean, this is a knee jerk reaction. Market in the short term always moves with sentiments. Negative sentiments has literally, like, made the markets on a downward trajectory. But believe me, if we get into the details, if we drill down little details, how many listed companies are getting impacted with this, tariffs? It's not. So it's just a sentimental thing, and the amount of impact it is going to have on the GDP is very minimal. I mean, we are just talking about a euphoria, but if we really get into the numbers, it is not that an impact where the market has to crash, or it's just a sentimental thing. So it is such a big sentiment thing that GST reform momentum, that sweeping overhaul in the pipeline, has been completely sidelined.
Right.
Uh, a group of ministers has signed off of collapsing the signed off an current four slab structure into two key rates, 5% and 18%, plus a special 40% for sin and luxury goods.
Right.
But of course, this is just rumors. But the council is set to meet on 3rd and 4th of this month, and if we could see a rollout right ahead of Diwali, and that means the reform narrative is now more real than a rhetoric, you know. And what consumers can expect is the immediate relief coming is for the households. This is a positioned as a double Diwali. Everyday items like packaged foods, apparels, services are slated for a lower GST. Analysts estimate that this could inject nearly 2 lakh crore of fresh demand into the economy, boosting consumption by 0.5 to 0.7% of the GDP in the festival season. This is a rocket fuel for sentiment. But there is some small concern between the BJP ruled and non-BJP ruled states. There are little tensions over revenue sharing. Um, but not everyone celebrating. States are nervous about these revenue losses, potentially about 1.8 lakh crore annually. For the center, that's about 0.15% of the GDP. But for the states, the hit could be closer to 0.36%. So this will be a cascading impact. That's meaningful, but especially when welfare infra spends are already stretched, we need to expect tough negotiations and around compensation. What happens? This is worth mentioning here because when the say states are not happy, they will not be able to spend on the GDP kicking measures. So this will slow down a bit and has an impact, cascading impact on the GDP. So the government has to be very careful in maneuvering these two things. To talk on the sectorial implications, who gains? As always, like the direct impact would be on the consumer and FMCG. Big winners will be those like HUL, Nestle. Of course, we have already seen a good rally in those in those counters. And of course, the autos also we have seen. When I say autos, both autos and auto ancillaries, especially the two wheelers and entry level cars should get cheaper with an 18% GST, reviving a sluggish segment. Yes, real estate is one thing where we need to have an eye on it. Real estate and construction, where the cement and materials, if there is a relief on these things, could reduce the cost. But whether the developers pass on these savings is another story.
Right.
Of course, on the insurance and health, lower GST and policies could deepen penetration, good for insurers and good for households. And but the dark cloud, which still hovering around, is on the tariffs. Now offsetting the GST sugar, high is the Trump tariff overhang. With reciprocal duties stacked up to 50% in Indian exports, 70% of our US born goods face the heat. The secondary impacts, of course, would be IT and banks via global inflows and sentiment was hit. But there are not the direct things. That are direct, impact sectors are textiles, gems and jewelries, leather, auto components, where we see a sort of a margin compression and order diversions loom to our different countries. And of course, consumer exporters like apparel, footwear, they are the big guys who face it. What are the relative beneficiaries would be consumption, domestic consumption, please, with little export exposure. Think FMCG, retail, and staples. Exporters, who can pivot to European Union or Middle East may even see a re-rating among the midterm. Why I'm saying Middle East over the European Union is the currency. I mean, Middle East, most of the countries have the currency which is directly pegged to dollar. So either you deal in USD or you deal in dirhams or any other currency which is directly pegged. You will not have that major I mean, the devaluation hit. If we see the last thing, which is, we also need to have eye on macro fiscal and market reactions in India.
Right.
Bond yields have already ticked up as investors digest revenue worries from GST cuts. But equity markets are cheering. The consumption boosts our narrative. Politically, the timing is like just before Bihar elections is no accident. This is both economic reform and political signaling. So
Yeah.
this is how we need to see in the coming means. We need to be a little cautious, wait and watch more, not only in the markets sectors global event, but also the political events how it is turning out.
Excellent, sir. I mean, very interesting insights. I would, as usual, want to add one or two points here. I mean, as a part of the discussion, right? So, one, of course, on talking about tariffs, I think we are not, in my personal opinion, I don't think we should be too worried, too concerned, because let's go back to 2021 India Australia series, right? So after
Right.
the famous win over Australia at Gabba, right? At Gabba, so the Australian coach said never ever underestimate Indians, right? So we our industrialists, our entrepreneurs will have a way of maneuvering the situation without impacting the sales. Is my personal opinion. And on the other side, talking about GST. I still feel that they should have gone ahead and straight away implemented rather than announcing it that it's going to come shortly, right? So now let's take an example of an automobile, right? So if the proposed rate is going to be 18% as against 28%, possibly during this 2 month period there'll be no sales at all, except for
Yeah.
those people who are not worried about the 10% additional payment, right? So Ashwin, I'm not pointing you out here anyways. So there could be I would say a few weeks of stagnation because people will want to wait if they're going to get a lesser rate. And point number two is, in spite of reduction in GST rates, you know, this situation will not fall under the anti-profiteering clause. So that means the manufacturers need not necessarily pass on the benefit to the customer. So that means there's a scope for them to increase their margin, and that is in
Right.
fact going to help them in their P&L in any case. So I still believe a country having a view of minimum 3 years and above, excellent time to get in and buy.
I think yesterday, I even talked to you about this, Lakshmi. So when I was at the showroom, so the main discussion more than anything else was about the GST by the sales team. They were just pointing out, while I was waiting for the car delivery, they were just pointing out, just for the sake of striking a conversation, I was talking about different models, variants, and they were talking, sir, GST. There's a circular, we don't know what. So suddenly the sales have come down. Suddenly there is a waiting game being played by the buyers. So uncertainty, like you said, when you give yourself time, it also, while it's a good, it's good in a way. Most of the times it also gives room for speculation from outsiders. So I mean, nothing that we can do about it. All just like you said, if you're looking at the markets from a 3 to 5 year perspective, it shouldn't really impact. It's just that those tactical adjustment to the portfolio in terms of which sector is going to benefit the most is what we'll have to look into. Now, coming to the more important or more nearby view of the markets, bringing the Nifty, Bank Nifty, and the open interest on the screen right away. I mean, look, we talked about the ending diagonal pattern, the breach of the trend line. Last week we have had a pullback. Only if it were not to sustain, we talked about it being a sell-off. And since about 4 or 5 weeks, we have been discussing that this is the final destination for Bank Nifty, or rather a milestone for Bank Nifty in the interim. That's what is achieved. It's a good clean three wave move. Now the important thing, now that is this is done, now the important thing is that we track the options data for Bank Nifty, and most importantly, hope that this support does not gets breached. If it does, then we are in for a little more selling in Bank Nifty, and that is something you really don't want to happen. And we were kind of reluctant to get into any of the, I think 2 weeks back we were discussing about not getting into any of the banking stocks at that point in time. And from 56,000 all the way to about 53,600 has happened in about 6 to 8 trading sessions. So it's quite a bit of sell off. So at this point in time, what I will be looking at, if you ask me, is will I be looking to go short? Not necessarily, because we are at a major support zone. What will be interesting for me to see is those low risk, high reward trades. So whatever has fallen the least, I've always been a firm believer of whatever has fallen the least in a correction will be the first to rise in a bull market. So if the reversal in Bank Nifty starts when and if and when it happens, I will be tracking those top 8 to 10 stocks in Bank Nifty or Bank X, which has fallen the least, and which is also showing immediate signs of reversal, so that you have a very low risk and a high reward sort of trade that you can get into. That's on the Bank Nifty. Moving to the Nifty, again we spoke last week that there was a pullback above the moving averages. A negative closing as compared to opening was not really a good sign, but we still hope that this will break. It did not. So although the market on the over broader sense, that is Nifty 50 in particular, is in a neutral zone, there is absolutely no trade sort of recommendation or suggestion that we have right now. uh, Try and hunt for those low risk, high reward opportunities, and this is kind of indicated in the options data. 25,000 is becoming a very, very important level to be breached. I mean, every time, last week and even this week, we saw kind of last week we saw 25,000 breached during the week, but it kind of gave up. Even this week, we saw market trying to push about 25,000, but it could not sustain, and 25,000 is becoming a major hurdle for the markets to cross. So indirectly, I'm hinting that until market crosses 25,000, which is Nifty in particular, we may not see major bullish trend happening in Nifty, and of course followed with stocks. Now, what is interesting to see is for the next 1 week, that is 2nd of September expiry, you have two major mountains. One is at 24,500, the other one is at 24,600, which the market is indirectly hinting that we may not cross 24,500 and 25,500, 600 for the week. Also, on the downside, you have a major downside open, except for this particular 24 400, which we are already kind of trading at close to 24 426. You have no major supports in terms of options data, so it kind of leaves the floor open till about 24,000 for the next 1 week to 10 days. So this is where I am a little reluctant in suggesting any sort of longs in the market. No shorts, because the market has already given up quite a bit since the last 1.5 week, and definitely not any longs until we cross about this 25,000 level. So absolutely no activity or no major action for the next 1 week to 10 days on the market front, Lakshmi.
Excellent. I think I would, as always, would want to conclude this with a question. So, looking forward for a one-line answer. Assuming each of you have couple of lakhs, would you still buy gold, silver at these levels? Yes or no?
Gold no, silver yes.
Interesting. Prabhanjanji?
I would, same answer. Gold, no. Silver, yes. In fact,
Wonderful. So, people,
I would if I have some more money, I will sell equity and then put it to silver. I will take that small, rejig in my portfolio.
excellent. So people who are unbiased like me could split your money between gold and silver equally, not worry about which is going to do better. And as usual, none of the discussions that we had constitute an investment advice. It is purely for educative purposes. I hope you enjoyed this episode. We'll be back in a week's time. Until then, take care. Bye bye.
See you,
Enjoy your
boys.
Malaysian day.